Okay, so this is October-November 2019 exam, and this is variant 4.2. As I said, for Pakistan, the variant of Cambridge exams is 4.2, but I mean, it's not a problem. You can also practice from other variants, but we'll try to practice most questions from 4.2 variant because those are exactly the questions that is exactly the same variant that we get on our exam, right? Okay, now let's get started and let's see. We'll come to the case study afterwards, but let's do some essay questions first. Okay, now have a look at this. So these are all the essay questions. Let's read all of these one by one. And as we did yesterday, that you will tell me what questions you want me to discuss in class, and then I'll do those in today's class, right? So here's the first question. Free markets make the most efficient use of resources and therefore and are the foundation of a successful economy. To what extent do you agree with this? Free markets make the most efficient use of resources and are the foundation of a successful economy. To what extent do you agree with this? 25 marks, right? So this is the first question. Question 3 says, explain what is meant by a normal good and comment on the link between total utility, marginal utility, and consumers' demand curve for that product, right? Explain what is meant by normal good and comment on the link between total utility, marginal utility, and consumers' demand curve for that good, right? So that is for 12 marks. Then the B part of the question says, discuss how government policies towards income and wealth distribution can affect a consumer's demand. How government policies towards income and wealth distribution can affect a consumer's demand. That is for 13 marks, right? Then question 4 says, explain how firm maximize its profits in perfect competition. The B part of the question says, discuss whether profit maximization is the best strategy in the long run for firms in different market structures, right? 5 and 6. Okay, we are coming to that. Explain the relevance. What is question 5 saying? Explain the relevance of economic rent and transfer earnings when comparing wages of skilled workers and unskilled workers. Okay, fair enough. Discuss whether workers always benefit when their trade unions achieve an increase in wages. Okay. So this is question 5. And question 6 says, evaluate how the relative size of injections into and leakages from the circular flow of income can affect the ability of a government to achieve its macroeconomic aims. Okay, great. So let's do 5 and 6. So let's get started with 5 first, and then we'll do 6, right? Okay, perfect. Now, coming to question 5, let's read A part together. Explain the relevance of economic rent and transfer earnings when comparing the wages of skilled workers and unskilled workers. 12 marks. Okay. Now, students, have a look at this. So you will start off by saying that, very briefly, because this is for 12 marks question and this is not for 25 marks question. So we will not go in too much detail about wage determination. So we will briefly tell the examiner about how wages are determined, but we will not go in very much detail, right? Wage determination. Wage determination. Okay, now students, have a look at this. Wage determination. Okay, now the first thing that we have to look at here is that we will explain how wages are determined, right? And this would be very much similar to what we discussed yesterday, that wages are the compensation for labor, and wages are determined based on demand for labor and supply for labor, right? So this is how you will start, right? Because until you have explained what you are doing over here, you can't come directly to the point of explaining what economic rent is and what is transfer earnings. So you have to give a little bit of background. Are you getting me? Right? So you will say that wages are determined based on the demand for labor and the supply of labor, right? Then you can very quickly tell and write the definition for demand for labor. Demand for labor is the quantity of labor that organizations demand at different wage rates. Is the quantity of labor that organizations want to hire or demand at different wage rates. That organizations want to higher slash demand at different wage rates, right? Is it simple? Okay. Then similarly, you can write down the definition of supply of labor, and the supply of labor is what? Supply of labor is the quantity of people or the quantity of labor that is available to work at different wage rates, right? So simplest definition of supply of labor is the quantity of labor. What is supply of labor? Supply of labor is the quantity of labor that is available to work at different wage rates, right? Is this simple? At different wage rates, right? Okay, after you explain this, you can just quickly make the macro, you can just make the market equilibrium in labor market, and that you would know already that that is based on the demand for labor and the supply of labor, right? So what you need to show on the graph, on the y-axis, obviously you will have the wages, and on the x-axis you will have quantity of labor, and then you need to draw quantity of labor, and you need to draw the two curves that we have just talked about. Downward sloping will be the demand for labor, so this will be DL, demand for labor, and upward sloping will be the supply of labor, so you can label it as SL, supply of labor, where the two intersect. That will be the equilibrium in the labor market, right? So after you have given this background that you know how wages are determined in the labor market, now you are in position to talk about what is economic rent and what is transfer. What is economic rent and what is transfer earnings? Is this clear? Is this simple? Okay, now think about this. Now moving forward to the main part of the question, right? Above, if there's any confusion, stop me in the middle and do ask me, right? Then you move on and say that earnings of labor, the total earnings of a labor is divided in two categories. Earnings of labor is divided in two categories. What are those two categories? Economic rent and transfer earnings, right? So whatever someone is earning, right? Any, whatever the amount someone is earning, that can be broken down in two categories, right? And the name of those two categories is economic rent and transfer earnings. Now, what is economic rent? So think about this. Whatever someone is currently earning, that would be his or her current salary, right? Whatever someone is earning, that would be his current salary. Yes or no, right? Now, what is that person's, have a look at this. What is that person's opportunity cost? That is his second best alternative use of his labor. Anything above that salary, right? Exactly. We're coming to that, Rabah. Yes. So how do we calculate economic rent and transfer earnings? That is what I'm about to explain you. So current earning, right? Current earning minus opportunity cost, right? So what you could have earned in the second best use of your time, which we call as opportunity cost. So what someone could have earned in the second best use of his labor, of his time, that is his opportunity cost. So current earning minus opportunity cost, that is equals to that person's economic rent. I'll give you a real life example as well so that you can better understand what this shows, right? So this is economic rent. Yes or no? And what is transfer earnings? So transfer earnings is basically equal to your opportunity cost. Transfer earning is equal to your opportunity cost. So think about this. If I am currently working as a teacher, right? So how much am I earning? That would be my current earning, right? If I would not have been a teacher, I would have been, let's say, a banker. So that would have been that is my opportunity cost. Yes or no? So what I could have earned as a banker, that is my opportunity cost. And that is exactly my transfer earnings. Is this making sense? Right? Arbaab, is this making sense? Opportunity cost. So what someone could have earned in the second best use of his or her time, that is known as his or her opportunity cost, and that is transfer earnings, right? So now coming back and writing the definition, let me write down the definitions here. So economic rent is any amount, excuse me, any amount earned above the minimum amount, any amount earned above the minimum amount needed to keep the labor, needed to keep the labor in its current use. Is making sense, right? So have a look at this. So think about this. I will continue to work as a teacher until and unless, now this is very important, Arbab, so I want you to pay close attention, right? So think about this. Let's say someone is earning 80,000 rupees at the moment, right? So we will assume that this person is earning higher than his opportunity cost. Yes or no? Obviously, that's why you are working as a teacher or whatever, right? If as a banker, you could have earned 60,000. So what is your opportunity cost? 60,000. Yes or no? Are you making sense? So currently that person is earning 80,000 as a teacher. In the second best use of his time, he would have worked as a banker and earned 60,000 rupees, which is his opportunity cost. And this is his opportunity cost. So this is his transfer earnings. And what he's earning on top of his transfer earnings is his economic rent, which is 20,000. So until unless his income doesn't fall to 60,000 rupees, this person will still stay as a teacher. Do you agree with me? Above, is this making sense? So until unless this person's income doesn't fall to 60,000 rupees, in that case, then you will be indifferent. Either you can work as a teacher or you can work as a banker, because now the earning is the same for the two occupations. But right now, since someone is earning 80,000 rupees as a teacher, so that person would prefer to stay as a teacher rather to work as a banker, because as a banker you would have earned 60,000, whereas currently you are earning 80,000. Is this making sense? Right? So that is what we mean. Any amount earned above the minimum amount needed to keep the labor in its current use. And what is the minimum amount to keep the labor in its current use? That is basically that person's opportunity cost. That is basically that person's opportunity cost. This makes sense, right? Great. And therefore, what would be the definition of transfer earning? Transfer earning is the minimum amount, or forget about the word minimum. Transfer earning is the amount that is needed to keep the labor, that is needed to keep the labor in its current use. Okay, have a look at this. Now let's revise this one more time and then move forward. Okay. To calculate economic rent and transfer earnings, what we need to look at, right? Firstly, we just need to know two things, right? What is the person currently earning, right? What is the person currently earning? That would be his current earnings, right? And how much this person could have earned and how much this person could have earned in the second best use of his time, which is basically his opportunity cost. So if this person is working as a teacher, let's say, as I was telling you, and he earns, let's say, 80,000 rupees per month, in the second best use of his time, he could have worked as a banker and could have earned 60,000 rupees. Is the story clear so far? Is the story clear so far, right? So far, we've talked about just two pieces of information. One piece of information says that the person is currently working as a teacher and he is earning 80,000 rupees. In the second best use of his time, he would have worked as a banker and he could have earned 60,000 rupees. It's as simple as that, right? Easy. Now, 80 minus 60. So 60,000, we can right away tell that this is the minimum amount that you need to receive as a teacher to stay as a teacher, right? So this is the minimum amount. So at least you should receive 60,000 rupees or more, right, to stay as a teacher. Because if your earning as a teacher falls to 60,000, then you will be indifferent. You can either work as a banker or you can work as a teacher. Are you getting me? Right? But as long as your earning as a teacher is above 60,000, then you will continue to work as a teacher because that is paying you more than what it pays you to be a banker. Is it making sense? Right? Great, perfect. So 80,000 minus 60,000, 60,000 is your opportunity cost. So that is your transfer earnings. So this is the minimum amount that is needed to keep you in your, that is the minimum amount needed to keep the labor in its present use. What is the present use? As a teacher. Now, when we subtract this opportunity cost from the current earnings, that gives you economic rent. Now, looking at the definition of the two terms, so what is transfer earnings? First, is the amount that is needed to keep the labor in its current use, which is basically its opportunity cost, which is its opportunity cost, right? And what is economic rent? Economic rent, any amount earned above the amount. Any amount earned, you can also remove the word minimum from here if you want to, right? Any amount earned above the amount needed to keep the labor in its current use, right? Is it making sense? Okay. Now, this being said, how do we show this on a graph? How do we show this on a graph? 60,000 is your transfer earnings. Exactly. 60,000 is your transfer earnings and current salary is 80. Current salary is 80 and transfer earnings is 60. So 80 minus 60 is 20. That is your economic rent. Now, how do we show economic rent and transfer earnings on a graph? Let me make that for you, right? Okay. So have a look at this. So here we go. On the y-axis, you will write wages. On the x-axis, you will have quantity of, on the x-axis, you will have quantity of labor, right? Okay, now you'll draw down sloping demand curve for labor, right? And normal upward sloping supply of labor, right? Is it making sense? Is it simple? Okay, now this being said, have a look at this. Now, where the two intersect, where the two are intersecting, just a second, right? Where the two are intersecting, demand supply, obviously that will be the equilibrium point that will show you the equilibrium wages, that this is the wage that a typical labor in the market gets. And this is the quantity of labor that will be hired in the market. And this is the quantity of labor that will be hired in the market. Any confusion so far? Is this clear? Okay. Now, which area represents economic rent and which area represents transfer earnings? So this upper part, below wages, right? So below wages, do you remember in class we talked about this? Below wages and above supply. This is economic rent. So this area is your economic rent, which I'm trying to shade over here. So this upper region is your economic rent, right? This entire triangle that I have shaded green is your economic rent, right? Is it making sense? And the remaining part, what is the remaining part? Below supply and above x-axis, below supply and above x-axis. So this is below supply and above, below supply. So this is below supply and above x-axis, which means this entire region, right? That would be your transfer earnings. Is it simple? Any confusion so far? Anything that's not clear? Right? We good on this? Okay, now think about this. Now, since the question is talking about, after you've explained all these things, now obviously you also need to be mindful of what the question is asking. The question said, explain the relevance of economic rent and transfer earnings when comparing the wages of skilled workers and unskilled workers. Now, think about this. We have to compare that how there will be a difference between skilled and unskilled workers when it comes to economic rent and when it comes to economic rent and transfer earnings. Okay, now think about it. Skilled workers are those who have years of work experience and so on, right? Yes or no? And unskilled workers are obviously, skilled workers are the ones who have some special skills, right? So if you think of, let's say electricians and plumbers, so it's a skill. They have learned how to work as an electrician. They have learned how to work as a plumber, right? Unskilled is, just normal manual construction workers, right? So unskilled is that they don't have any special skill, but they are just available for manual work. Are you getting me? Okay. Now, for the skilled workers, the demand and supply, now this is a very important point, and we'll see through the graph as well. For skilled workers, the demand and supply will be more inelastic. Demand and supply of skilled labor will be more inelastic. Why is that so? Let me tell you. So do you remember we talked about the wage elasticity of labor demand and wage elasticity of labor supply? Think about this. Finding a skilled worker is not an easy thing, right? And you can expect that there will be limited number of skilled workers, right? Are you getting me or not? Right? On the other hand, when you talk about unskilled labor, so anyone who is available to work would be unskilled labor. But when they learn some skill, that is when they become skilled. Are you getting me or not? Right? So compared to unskilled worker, as I said, the demand supply of skilled labor will be inelastic. I'll show you in a graph in a bit. And for unskilled, demand and supply will be more elastic. Demand and supply will be more elastic, right? Why? Because think about it. It's easier to hire unskilled workers rather than skilled. Is this making sense or not? Right? So how do we show it on the graph? So let's say on the left-hand side, we're showing it for skilled workers, right? Let me also label it on the top. So this is how the graph for skilled workers would look like, right? Okay, and this is how the graph for unskilled workers will look like. Unskilled workers. Okay, now for the unskilled workers, let me choose a different color here, right? Okay. So on the y-axis, you have wages, and on the x-axis, you have same quantity of labor, right? Quantity of labor, and similarly, over here you had wages. Sorry, what did I choose? You have wages and you have quantity of labor. Is it making sense? Okay, now have a look at this. So first, for the skilled labor, right? So when you have inelastic demand, have a look at this, right? So you will have steep demand curve, and you will have steep supply curve, right? You'll have steep demand curve and you'll have steep supply curve. Is it making sense? Right? Yeah. Right? Or let's say we make it like this. So let's start supply from the origin, right? So this is how inelastic will look like. For the more elastic, on the other hand, you will have less steep demand curve and less steep, you will have less steep demand curve. So like this, and you have less steep supply curve. Less steep supply curve like this, right? Okay, now have a look at this. This is where the equilibrium is in this market, right? Q1 and W1, right? And in this market, the equilibrium would be where the two intersect at this point. So this will be W1, and this is the quantity that would be hired in the market, right? Okay, Q1. Is making sense, right? Okay, now think about this. I think, just give me a second. I think it should be we can keep the demand the same, but we can keep the supply, just a second. Right, just a second. This is the demand for labor, and this is less steep, and yeah. And for more steep, we can also start from here. Just give me a second. Sorry about that. This is supply of labor, right? Supply of labor. So it would be like this. Yeah. Okay, so have a look at this. Right, this is how it would look like. Yes, absolutely. Absolutely. Okay, now think about this. Right, so what I did was, let's go back and change this, right? So for the skilled labor, think about this. Supply is the main thing. So supply will be inelastic for skilled labor. Why? Because think about this. It will be difficult, as I was telling you, to hire skilled labor, right? There will be fewer people who are skilled, right? This is how it happens. The more experienced person you're looking for, or more skilled person you're looking for, obviously those are less in relation to unskilled labor. Yes or no? Supply will be inelastic in this case, right? Whereas in unskilled labor, supply will be elastic, right? Supply will be elastic. Is it making sense? And this is exactly what I've shown. So you can see that demand is more or less the same, right? So if you look at the demand, the shape of the demand curve, right? So let's say we have equal demand for both the occupations, right? But the steeper supply curve of skilled labor shows that they are rare, they have less supply, whereas more elastic supply, which means it's less steep for unskilled labor, shows that they are more readily available. Is this making sense? Arbab? Is making sense, right? So this was unskilled labor, right? Now think about this. After you made this graph, so we have kept the demand curve more or less the same, but we have shown in this case, since it's unskilled, so supply is starting with the y-intercept and it's more elastic, right? It's flat, it's flatter, it's not steep. Whereas this we have shown to be steep, right? This we have shown to be steep. Now, which area in this case, in this unskilled labor graph, which area would represent economic rent? Now, have a look at this. Now, the area below wage, so area below wage and above supply. So area below wage and above supply, which is this one, right? This is what? This is your economic rent. Yes or no? Can you see? So this is your economic rent. So this entire yellow region that I've labeled over here is your economic rent. Any confusion so far? Right? And on the other hand, right, the economic rent for skilled workers would be, let's use the same color, right? Below wage and above supply. So it will be below wage and above supply. So this would be in all of this triangle. And you can see in this case, this triangle is bigger, right? So it shows that economic rent is more compared to in skilled labor compared to unskilled labor. Now, what is the explanation for that? We also need to give the explanation, right? So we just not only need to make the graph, we also need to give the explanation. So what do you think is the explanation? Okay, now let's move forward and talk about that, right? And the explanation is skilled workers have developed special expertise, right? Because obviously the very word skill means that they have some expertise, have developed special expertise which other
workers don't have special expertise which other workers do not have, and therefore they earn more than their they earn more than their opportunity, or let's write it down down like this, and therefore their current earnings are much higher earnings are higher than their opportunity cost, making them earn more economic rent. Is this making sense? Right? So let's read this statement again. Okay, have a look at this. Now, the question was saying that compare, now let's quickly revisit the question again. The question was saying what? Explain the relevance of economic rent and transfer earnings when comparing the wages of skilled workers and unskilled workers, right? So what you are supposed to say, you started off by, you started your question by defining what is wage determination, what is labor demand, what is labor supply. Then you make a normal labor market equilibrium diagram as shown on the graph. Then you talk about that economic rent is, economic rent is any amount that you earn above the amount needed to keep the labor in the current use, and transfer earnings is basically your opportunity cost. So this is the amount that is needed to keep you in the present use, right? Okay, then on the graph, you have also shown what is economic rent, what is transfer earnings, right? You have labeled that area. Then moving on, you said that skilled laborers are, obviously more skilled. They have some special expertise skills. So they have inelastic supply, right? Because they are not in abundance, whereas unskilled laborers do not have any skills. Therefore, there is more supply. So their supply is more elastic, right? After you've explained this, you made the graphs where the demand for both the occupations is more or less the same. The demand from both the occupations is more or less the same. But what is different? In the case of unskilled labor, you can see that labor supply curve is elastic, which means that there's more supply. And in skilled workers case, the supply is less elastic, inelastic, right? That's why it is steep. That's why it is steep, right? Then you label the area. Clearly, by looking at the area, you can see that economic rent in this case is greater than the economic rent in this case, right? Okay, now what is the reason for that? Now, this is important. Skilled workers have developed special expertise which other workers do not have, and therefore their current earnings are higher. What happens when someone has more skills? Don't they earn more? Right? Are you getting me or not? Right? So let's say there is skilled and unskilled workers. So if unskilled worker is earning, let's say he has recently joined, right? And that person is, let's say, earning in Pakistan 20,000 rupees per month. On the other hand, someone who has become more skilled, which means that this person can, on his own handle any project and get things done. So that person obviously will be earning more. Assuming that the opportunity cost for both skilled and unskilled workers is the same, right? So whose economic rent would be high? Obviously the skilled workers' economic rent would be high. So this is all what you're supposed to explain in this question. So this is all what you're supposed to explain in this question. Are we good? Can we move on? Okay, now B part of the question says, right, discuss whether workers always benefit when their trade union achieves an increase in wages. Perfect, right? Now for the B part, Bob, the question says discuss whether workers always benefit when their trade union achieves an increase in wages. Right. Okay. Now think about this. So first of all, you have to briefly tell what trade union is. We'll not recap this again because we talked about this yesterday as well. So you say trade union is a platform that represents. Yes, you can definitely, right? So you start off your answer by defining what is trade union. So you will say about that trade union is a platform or an organization that represents workers in any particular firm or in any particular industry. And the purpose of the trade union is to protect the interests of its workers. And trade union is responsible for collective bargaining on behalf of its employees. Trade union is responsible for collective bargaining on behalf of its employees. Okay. After you explain all of this, then you will talk about industrial action, that trade unions have different demands. From time to time, they make different demands with the employer. And if the demands are not being met, they are likely to take industrial action. Right? What is industrial action? Industrial action is the action that trade union takes to retaliate or to show their dissatisfaction against any decision that the management might have taken. Like if trade union doesn't get to accept, if trade union's demand of higher wages is not accepted, or if their requirement of better working conditions is not accepted, then trade union will take industrial action in the form of going on strike, protesting against the company, work to rule, and all these other things that they can use, right? Okay, so after you explain this, now you will come directly and jump to the main part of the question that says, what is the main part of the question saying? Whether workers always benefit when trade union achieves an increase in wages, right? So now we'll assume that the trade union has been successful in achieving higher wages, but would this always benefit employees, or in some cases they can also be at loss, right? So let's talk about two scenarios. Yes, workers are benefiting, right? When wages are increasing, workers are benefiting. So this is one side of the story, yes or no? And what is the other side of the story? That no, higher wages are not helping the workers. Why so? We'll talk about it. Workers are not benefiting. Is it simple so far? Workers are not benefiting. Okay, is it simple? Above, right? Is this exactly what the question is asking for? Okay, now you tell me, what are the reasons that make you believe that when there are higher wages, the workers will benefit? What makes you believe that when there are higher wages, the workers are benefiting? So obvious point is, higher wages would allow workers to earn more income, which means that they have higher purchasing power, so they can better afford goods and services that they need for their day-to-day consumption and so on. Would increase workers' purchasing power and so would allow them to afford different things that they need, right? Yes or no? That they need. Is it simple? Any confusion so far? Okay, now this being said, we'll move on and we'll talk about why that might not be a benefit. Okay, so what do you think? Why would it not be a benefit if trade union has been successful in demanding higher wages? What could be the problem with that? What do you think? What would be the problem if trade union has been successful in negotiating higher wages for its workers? Yeah, think about that, right? So the biggest problem is that, think about this, there is a chance of downsizing. Are you getting me? So do you remember we talked about this, that if somehow trade union has convinced the company to pay higher wages to its workers, but the chances of downsizing is never, it's never gone, right? So there is a chance of downsizing, right? Because obviously the company would want to cut upon its expenses. There is a chance of downsizing means that some of trade union members can lose their jobs. Members can lose their jobs. Is making sense? Right? So it's not always a good thing that the wages have increased, because then obviously to cut their expenses, company might want to lay off some extra workers, and therefore this means that some people might be redundancies. Exactly. Then another thing, business might be closed. Okay, that's correct. Then another thing is that I'm talking about the no side, right? Why is that not always a good thing? The company would also expect workers to increase their productivity, right? Are you getting me or not, right? Because think about this. For private company, as we were also talking about in the other class as well, all they care about is profit, right? So if for any reason the cost of the company is increasing, in this case it is the wages of the company that is increasing, the company will try to look for all possible avenues. The company will try to look for all possible avenues where it can compensate itself. Yes or no? The company would expect the workers to increase their productivity, which means that they might impose other things like working longer hours, producing more goods. Company would expect workers to increase their productivity, which can result in longer working hours. Right? Is this making sense? Which can result in longer working hours. Working hours, right? So again, this is not a very good thing. And one more thing, that the company might be looking for substitutes of labor, right? So they will try to replace labor with what? With technology, with machines, right? Because obviously, again, coming back to the same point, that company would not like the fact that their profits are decreasing and so on and so forth. So in the longer run, at least they would try to look for cheaper alternatives. Yes or no? Right? Might start looking for of labor. Is it simple? Is this clear? Okay, change labor to capital. Exactly. So that's the thing, right? Change labor to capital. We got on this? Any confusion so far? Any confusion about anything that's not clear, right? So let's look at the question one more time and let's try to sum this up. So the question was saying, the B part, discuss whether workers always benefit when the trade union achieves an increase in wages. So to that, you first define what trade union is, right? You explain how trade union operates. Then you talk a little bit about industrial action. What is industrial action? So when trade union demands are not being met, they protest, they go on a strike, they show their dissatisfaction and so on, just to put pressure on the company to accept their demands. Okay. After you explain that, then you need to talk about that whether increase in wages is always good for the members of trade unions, right? So you will say, yes, on one hand, it is beneficial. Why is that beneficial? Because obviously workers will get higher salaries, which means that they, they have more affordability, they can buy more goods and services, and the standard of living will improve, obviously, right? But on the no side, there can be some other arguments. What are the arguments? That firstly, there is a high chance of downsizing. The company would want to, make people redundant, cut on its labor force and so on and so forth, so that to cut on its cost. Similarly, then they might expect the workers to increase their productivity, which means that they can make them increase their working hours, which again is not a very good thing to do, right? Obviously for workers, it will be more responsibility and more workload. And the third thing is that the company can start looking for alternatives of labor, which again means that in the long run, people can be replaced with machines and so on. Okay, Arbab, so benefits apart from that, increase in wages, what else can you talk about? I mean, that's the only benefit that that's the only benefit that you can, get more salaries and more affordability. I don't think so. Let me think about it again. But I don't think so. There would be any other positive, any other benefit of that. Yeah. Right? And this should be good enough. Okay, now moving forward to the sixth question. Okay, evaluate how the relative size of injections into and leakages from the circular flow of income can affect the ability of a government to achieve its macroeconomic aims. So let's read this question one more time. This is a 25 marks question. Evaluate how the relative size of injections into and leakages from the circular flow of income can affect the ability of a government to achieve its macroeconomic aims, right? So first of all, now this is a very interesting question. First of all, you would need to, so the question is saying that how injections and leakages, right? So how injections and leakages are affecting what? How injections and leakages are affecting your macroeconomic aims, right? So first of all, it would be better to start off by listing all the macroeconomic aims that an economy has, right? All the macroeconomic aims that an economy has. Okay, now think about this. So what are the 5 macroeconomic aims that we talked about? Do you remember? So for any country, there are 5 major macroeconomic aims that a country wishes to achieve, right? So the first one is, let me list it down, high economic growth rate. You can perhaps start off this question by listing all the, all the macroeconomic aims. High economic growth rate, so that is a very important aim of any country. High economic growth rate, that's the first one. Then the second aim is low inflation. You also know about this, right? Then the third one is low unemployment, right? The third one is low unemployment. Then you have stable exchange rate and stable balance of payment, right? Stable exchange rate and stable balance of payment. Is this clear? Any confusion so far? Stable exchange rate and stable BOP, right? Are we good? Any confusion so far? Okay. Now this being said, let's talk about each one of these one by one. Then you should ideally explain what circular flow of income is. Remember, we talked about this. Circular flow of income is a graph, or you can say is a diagram that shows how money circulates in an economy. Circular flow of income or circular flow of money, as we say, it's a graph that shows how money circulates in an economy. In that, if you remember, we talked about that there are 2 major sectors. In fact, there are 4. What are the 4 sectors? Household, firms. Household are the people like you and me. Firms are the companies that are producing goods and services. Then there is government. So government, everyone knows government role is to collect taxes and to provide welfare to the citizens. And the 4th sector is international trade, like all the other companies and businesses across the globe, right? So we did look at this. I'm not about to make it again. So from uh, households provide the factors of production to the firms, and firms provide the goods and services to the households, and then there is compensation provided by firms to household in the form of compensation for the factors of production like rent, wages, and all that stuff, right? Because obviously factors of production are not for free, right? So this goes from here to here, and obviously households are paying the firms the expenditure that they're making on goods and services, because goods and services are also not free, and so on and so forth, right? Are you getting? And then you also show leakages and injections on the graph, right? So leakages is the money that is going out of the system, right? Like this. So any money that is going out of the system, right? That includes three leakages. What are the three leakages from any system? Savings, right? When people save their money, taxation, when government takes their money away, that's also a leakage. And the third one is imports, because this is the money spent on foreign goods, and that is also a leakage from the system. And the three injections include, what are three injections? Investment, right? When businesses expand and invest, right? So that is one injection. Another one is government spending, when government spends money on providing any service like public infrastructure, public education, public healthcare. So all of that is part of government spending. And the third one is exports, right? So these are the three injections, right? So after you've explained all of this, now you will come to the main part of the question and talk about that how leakages and withdrawals affect achievement of macroeconomic aims, because that is what the question was asking for. Now you're coming to the main part of the question, that how the relative size of injections and leakages from the circular flow of income can affect the ability of a government to achieve its macroeconomic aims, right? Is it simple? Okay, now let's talk about each one of these one by one. So for the first one, which is high economic growth rate, right? So for the high economic growth rate, if you have more injections, how it doesn't affect your ability to achieve economic growth? Did you get my question? So if there is high injections in an economy, my question to you is, how does it help a country to achieve high economic growth rate? Right? So the answer to that is simple and easy, right? So we did look at through the Keynesian cross diagram yesterday. Yes, exports will obviously increase. Exports can be injection, investment can be, and also government spending, right? So think about this. Let's choose a different color. So if your injections are increasing, we know that the entire Keynesian cross diagram that we talked about, I think yesterday or day before that. So on the y-axis you have aggregate expenditure, on the x-axis you have nominal GDP. So I'm just writing GDP, which is depicted with y, right? So I'm writing y, right? Then you have this aggregate expenditure line, which is upward sloping with y-intercept, and to this you have to make your x is equals to y line, where the two intersect. That is your equilibrium point. That is the equilibrium point for the economy. So that will show how much will be the GDP in the economy. This will show how much will be the GDP in the economy. Okay. Now this being said, what happens when there's injection? Your aggregate expenditure line shifts upwards. So your aggregate expenditure line will shift upwards parallel like this. Right, just a second. It will shift upwards parallel somewhat like this. So aggregate expenditure line will shift upwards like this, right? And then your new equilibrium would be like this. So this is defined as multiplier effect. What is the name of this thing? Multiplier effect. So this much increase in GDP happened due to rise in the country's injections. This increase in GDP happened because there was rise in your injections or investment. That was your change in injections. This is your change in injections, right? Is this simple? Okay, now multiplier effect says, right, exports can be one reason for that, government spending could be one reason of that, and so on. Exactly, that's correct. And exports can be very important, and then you can also explain in your own words that export can be very important, growth factor for smaller countries. Because if you remember the other day, we were having very interesting discussion that smaller countries do not have a lot of local market, right? They don't have a lot of demand in their own countries, right? So let's say Bangladesh, Vietnam, these are smaller countries, so they can't really expect that whatever they are producing would be sold in their own country. So what they have to do instead, that they are always on the outlook of exporting more, right? So because if they export more, they will be able to generate more GDP for the country, and so on and so forth, right? So that could be one reason. And then you can talk about how investment can be promoted by giving private firms some incentives, like reducing their taxes, giving them lower interest rates, and blah blah blah, and all that stuff, right? So we do know that higher injections will directly help the country achieve high economic growth rate. So that's the first thing that we've talked about. Is this simple, right? Right? And then you can also talk about the formulas of the multiplier effect that we have looked at again and again. There are two formulas that you need to know as part of your syllabus. So multiplier effect can either be calculated simply as change in GDP divided by change in injection. So you would write that down as change in GDP divided by change in injection, change in injection, right? And another way to write the multiplier effect is you can do it like this, right? 1 divided by withdrawals, right? What are the three withdrawals? Marginal propensity to save plus marginal rate of tax plus marginal propensity to import. MPM, marginal propensity to import, right? So these are the three withdrawals from the system. So lower the withdrawals, obviously greater would be your overall multiplier effect, right? Lower the withdrawals, greater would be your multiplier effect. Great. Okay. Now this is the first macroeconomic thing that we have explained. Then how more injections will affect your inflation. So what do you think about that? So if there are more injections taking place in the economy, what do you think effect it would have on your inflation? What do you think? Well, okay, so think about that. For inflation, what you're supposed to talk about is, if you remember, we made the graph in AS economics of macroeconomic equilibrium, where we have general price level on the y-axis, we have general price level on the y-axis, and we have real GDP on the x-axis, right? So that graph shows us macroeconomic equilibrium, right? So you will have GPL, general price level on the y-axis, and you will have real GDP on the x-axis, right? Okay, now downward sloping is your aggregate demand, downward sloping is your aggregate demand, and upward sloping is your aggregate supply. So when there are more injections taking place in the economy, what happens? What is aggregate demand made up of? So aggregate demand of an economy is made up of consumption, investment, government spending, right? Plus exports minus imports. Yes or no? Right? Now, what are the three injections here? In this equation, you can see I is an injection, G, government spending is an injection, we talked about this, and exports is an injection. So if any of these components increase, what happens? If any of these components increase, your aggregate demand curve shifts to the right, right? Your aggregate demand increases and therefore will shift to the right. What will that do? That will result in higher general price level. That will result in higher general price level. Yes or no? Is it making sense? Inflation increases. Exactly. Absolutely. That's correct. Right? Just a second. Okay. Then similarly, you'll explain the relationship between injections and what is that called? Unemployment. So what happens when there are more injections? What happens to unemployment? What do you think? When there are more injections taking place, what will happen to your unemployment? Your unemployment will decrease. Yes or no? Am I right with this? Right? Your unemployment will decrease because there's more GDP taking place. We have just explained it through this graph right now. We've just explained, because think about this. When there is more GDP taking place, to produce more GDP, what do you need? You need to hire more people who will produce the goods and services for you, right? So this means that the unemployment of the country would decrease. So that's another thing that we've explained. Okay, and then comes in the exchange rate and the balance of payment. So exchange rate depends really exactly. So exchange rate would depend on a couple of factors. If you're exporting more, what happens to your exchange rate? If you're exporting more, what happens to your exchange rate? Right? So it appreciates exactly, right? When you're exporting more, the demand of your currency will be more, and therefore your exchange rate will appreciate. And the last of all is your balance of payment. Again, when you're exporting more, your balance of payment will be more healthy because your exports are going up, and the value of your exports is high. So on and so forth, right? So these are all the things that you have to explain in this question. Is it making sense? Right? So Bob, I think we are getting late for the other class. So we'll stop here for today, and tomorrow we'll continue from here, right? So let's move to the next class. Great, perfect.